in America today, the first thing that happens to anybody that dies is their account is frozen. When you die in America, you pay taxes.
A lot of people don't know that you can actually take out money from insurance. To their knowledge is like until when I die. There's something called the cash value where you can take out from your policy, and people get surprised. I can do that, really?
Yes.
I can take out money from my insurance
while I'm still living?
While I'm still alive,
Yes.
you know? Money can grow in 3 different ways. The first one is a fixed bucket. Basically, your checkings account, your savings account. It's not growing anyway. We'll just say it's one of the ways money grow. It's fixed. People who have a lot of money just sitting down in the bank account or just sitting down in somewhere, they don't understand, or they have not heard about the term called probate. This is something I want people to understand, especially the wealthy people. Life insurance is essentially you buying your net worth while you're still alive.
I like that.
I believe that when knowledge comes, it shines the light upon ignorance, and then it's like a new revelation that the person gets. But this is what happens when people get a new knowledge. They can either accept that new knowledge or they can reject the new knowledge. And guess what a lot of people do? They reject it. And when people say I have something with work, they fail to realize that you are not the owner of that job. You could get laid off at any time. It only takes one person in the family to make that decision that I want to create generational wealth. Some people have never thought or asked themselves this question: what's going to happen to my family if I cease to exist today?
Hello, people. You know what time it is. It's your boy again, Dr. Ernie Royalty, coming to you live from the Royalty Mindset Podcast studio. We're back again with another exciting episode, another exciting time indeed. So in this episode, I have a very good friend of mine on set with me, and we're going to be having a lot of discussion around wealth building, wealth retention, and wealth transfer. My guest today is a trained electrical engineer who practiced in that field for so many years and then transitioned into the field of finance. He's a licensed financial professional, and he is very valuable in this area, very knowledgeable. So I couldn't think of any other person than Ralph Obo to be with me on set and have this discussion with me. Ralph, it's nice to have you here.
Nice to have you, brother.
Welcome
Thank you
to
so
my
much.
podcast.
Thank you so much.
Yes.
Thank you so much for the opportunity to be here. I mean, I've seen your podcast online, and you've been doing very great stuff online. I see what you do. I see how you brought in great guests to your podcast, and you have really transformed a lot of life with what you do. I remember when I first came across your podcast, it was so eye-opening, especially when you talked about mindset. I kind of like, these guys are really, this guy's pretty sharp. Someone I'd like to have a podcast with, and I'm glad we're able to make the opportunity happen today. Thank you so much for having me on here.
Thank you so much, Ralph, for those kind words. I really appreciate it. Let's have a cheers to that.
Absolutely. Cheers to that.
Cheers.
Yeah.
All right. Just for a brief introduction again of myself to the audience, because I had never really talked about this on my podcast. A lot of people do not know that I'm also a licensed financial broker. I play in that field as well. And Ralph and I have done a lot of deals together in this area. And that's the reason why I feel you'll be the best person to have this discussion with. Oh. Now, let's talk about finance. When I mean finance, really, I'm talking about life insurance. Finance space is so broad, right? And then when we talk about how we can build wealth, retain wealth, and transfer wealth, life insurance comes to mind. Mm-hmm. You are a licensed financial broker operating specifically in the area of life insurance. Tell us, Ralph, first of all, what is life insurance? Why is it important? Why do we need life insurance in this day and age?
You know what? It's a very great question you ask, because most people today, they have a limitation when it comes to understanding what life insurance truly is, you know? And I can understand why, because it most likely has come from their past experiences or people around them not having this great tool. You know, like I was looking at my community, like the Black community, and saying, how many people truly have life insurance? I thought about it for a very long time, and I realized that not a lot of people. Why? Because of that gap in knowledge, right? Most people don't have the understanding on what it can be and how we can actually use it. So what is actually life insurance? In very simple terms, life insurance is a tool that everyone should have in their financial planning journey to help protect your income in case of loss. As simple as that. Everyone should have that in their financial planning journey to protect your income in case of loss. Why? Because we never can tell what's going to happen tomorrow. And I like to believe that our greatest asset today is our ability to make an income. If I don't have the ability to make an income today, what's happening is that I become a liability to those who are around me. And when people switch their mentality to understand life insurance from that perspective, now they see the importance of it when it comes to protecting their loved ones, talking about protecting their wife, their kids, those around them. Some people have never thought or asked themselves this question: what's going to happen to my family if I cease to exist today? If something should happen to me today? And so, because of that, they've not really asked those tough questions. They haven't really seen the value on why life insurance is the answer to that question. And when you've not asked yourself a question, how can you have an answer to the question you've not asked? Right? And so that's why life insurance is important. And I'll say in very simple terms, life insurance is the tool used to replace your income in case of loss. And now, over the years, life insurance has now grown into a super tool, not just a tool for income replacement. You can now use that to create wealth, to transfer wealth, and also to preserve wealth within a family or within a dynasty. So that's, I would say,
Wow.
in very simple terms, what life insurance is all about.
Very, very, very great explanation. And at least everybody should be able to understand what life insurance is with the terms you have used.
Absolutely.
Very simple and very basic. I love the fact that you said the primary use of life insurance is for protection of wealth, preservation of wealth, basically. Somebody who, loses his job or whatever, doesn't know exactly what to do next. If he has life insurance before then, it's kind of like in a balanced situation, right?
Absolutely.
Yes, that's the protection aspect of it. When you were just talking about this, it took me back to how I used to think. I first heard about life insurance in 2019. IUL. We've been hearing about life insurance since, time immemorial, but it was different the way we were told life insurance was. But in 2019, I had a different revelation of what life insurance, is. A friend of mine who is a big broker today in the industry reached out to me. We were working at the bank. We were technologists in the banking sector at that point in time. And this guy came to me and said, "Hey, do you have life insurance? You need to get a life insurance." I said, "Hey, I already have one from the one my company is providing for me." He said, "No, that's not the type of insurance I'm talking about. That's a group life insurance. That does not cover you in anything. It has a lot of caveat to it. So you really are not covered fully if you're thinking that you have life insurance
Absolutely.
just by having that group life insurance." Still, I was still very naive. I said, "Please, I don't want to hear about this. Don't tell me about this thing. Leave. Just go." So we see a lot of people like that today. Yeah. What do you have to tell such people? I will come back to this same story as we proceed in this discussion.
You know what you said is so true, because I see that a lot when in this industry.
Yeah.
I see that a lot when I talk to people and then I ask them, "Hey, do you have anything for life insurance or anything to replace your income in case of loss or something should happen to you?" And I hear, "Oh, I have something." I said, "What is it that you have?" "Oh, I have something with my work." And I'm like, "Okay, that sounds good. Apart from what you have at work, what else do you have?" And they're like, "Nothing." And I show them the value and why they need one. And then they're like, "Oh, you know what? I still have something at my work." Because what usually they have with work, they don't get to pay nothing to it.
Yes.
In fact, most of the time it's a group insurance. And so it's like $2 or $10, let's say $20. Why? Because the work is most likely the employer is actually the owner of it and they are paying the premium. So they don't see it from their paycheck, but they just know I have something at work. And I sit down with them and I ask them, "Let's see what you have at work. I'm glad that you have something at work." And what we'll come to realize is that most times they have usually 1 times their annual income. The most sometimes you see twice their annual income. Only those who might have some more education might go seek for more from their employer, from the HR department. The majority of the people I talk to, they have just 1 times annual income or 2 times their annual income. And then I explain to them, right now, let's say you make 100 grand a year. And if something should happen to you today, Do you think $100,000 a year is going to be able to replace the income you would have brought into your family for the next 20 years? In fact, for the next 20 years, you're most likely going to bring $2 million to your family if your income doesn't change, right? But if something happens to you today, you're driving on the highway, a crazy drunk driver, someone who you didn't know, didn't stop on the stop sign and just keeps going, boom, T-bones your car, and you pass away, leaving behind your wife and your kids. Do you think $100,000 will be enough to take care of them for that 20 years that they're going to miss you? And then they'll be like, I never thought about it this way. But then I asked them now, do you see the importance of getting it? They say, yes. Now take action for your family. They say, you know what, I'm just going to steal what I have at work. And the reason why, like I said, is the knowledge gap and the mindset shift. And I hear that a lot, like you said. And then most of the time, what I do for them is I'll try to explain more and I try to show them what would happen if something like that should happen. What's going to happen to their family?
Right.
And you know, people love their family. Like people claim to love their family, and sometimes you get to you're able to help redirect their mindset to what is good or what is best for their family, and not just depending on work. And when people say I have something with work, they fail to realize that you are not the owner of that job. You could get laid off at any time, right? And now imagine something changes in your health, right? While you're still working with that company. And for that same reason, they say, you know what, Mr. A or Mr. B, we can no longer have you as an employee. We want you to go rest. We're going to give you some severance pay for a period of time, but we can no longer have you working in this job anymore. Now, that person might not be able to qualify for a personal life insurance, and what they have with work, they have lost it. Now, imagine that took this person 5 or 10 years for it to happen. Now, this guy is like 10 years older. The cost of insurance for him has now skyrocketed over the period of time. And what? His family now have to do whatever they have to deal with.
It's quite unfortunate.
Very unfortunate.
It's quite unfortunate. Even at that, whatever group policy that you have from your employer has a lot of conditions attached to it.
Totally.
Do you know that when you are asleep, when you are not on duty, you might not even be covered by that same policy? You are mostly covered when anything happens to you while on duty, while at work. When you are on holidays, PTO, you might not be covered. A lot of people do not even know that, because the policy is written in a very fine-tuned and very small letters that you really don't know everything, all the clauses written in it. So that's quite unfortunate. I ran away for quite some time until I met someone else in 2020 who said, hey, let me give you a life insurance policy. I said, you guys have come again? Please leave me alone. He gave me a book. He said, go read this book. When you are done reading this book, come back. We'll have a discussion. I took the book, got home, I just flinged it up. Just kept it in my library without even opening it. 2 years down the line, in 2022, I was traveling, as my custom is. Whenever I travel, I like to go with books and read on the plane. Instead of watching movies, I just like to read on the plane. So I decided to go with this, book to that journey. While on the plane, I opened this book. I started reading it. I didn't want to close this book. It was so interesting. A lot of information encapsulated in that book. It was as though I had just gone through Harvard financial education system in these few hours of reading this book. When I landed, I said, I can't wait to get back to America so I can get myself a policy. Something struck my attention in that book. It says, the lifestyle you live today, if anything should happen to you, remember, you are the goose that lays the egg, right? You are the one producing the money you have been using to live the lifestyle, to afford the lifestyle you've been affording or living. What if anything happens to your health that you are unable to continue to provide for yourself? How long will it take for the money you have saved up to be exhausted? Will you continuously be able to live the same lifestyle you live now? You want to fly to Australia today, you're able to do it. You want to fly to Japan today, you're able to do it. What if anything happens to your finance? Are you going to be able to continue to live this lifestyle? Those were the questions in the book. And I told myself, I have been dreaming and I have been sleeping. I can't wait to get back to America and get myself my first policy. When I returned, I called him. Hey, dude, come around. Let's get this done. And he said, no, I don't have time right now. I said, please, I know better now. Let's get this done. That was how I got my very first policy, just for me to know that I am covered in that regard. If anything happened to me today, I know I am good. Yes.
Just to add to what you say, I believe that when knowledge comes, it shines a light upon ignorance, the darkness of ignorance. And then it's like a new revelation that the person gets when you get new knowledge, right? But this is what happens when people get a new knowledge. This is what happens. You have two things. They can either accept that new knowledge or they can reject the new knowledge. And guess what a lot of people do? They reject it. Why? Because it's going to create something called a cognitive dissonance within them. Meaning that they know they should do this, but they are not used to doing that. This knowledge is kind of like, it's trying to change their paradigm, and it's very uncomfortable. Very uncomfortable. Those tough questions, like you said, that you read and heard those tough questions caused something to change. It caused something it stirred something inside of you.
Indeed.
And then you started to think. But luckily for you, you accepted the knowledge. You accepted that information and you received it. And so what it did was it helped to reorientate your mindset and change your paradigm. But a lot of people don't do that. What they do is say, hey, you know what? Maybe next time. This is not for me. This is not for me. This is not for me. And that's where they allow ignorance to inhabit in their mind. They just stay there not because the knowledge was not there. There's so many books about insurance and how it's important in creating wealth, how it's important in protecting your family. But a lot of people reject the knowledge. Why? Because of what it's going to cost them to become. Now, some of them will be thinking, I have to now start paying a certain amount of premium towards this. I have to start putting X amount of money towards this. You know what? I'm okay the way I am. I don't think anything is going to happen to my family. But when something happens, guess who they call first? They call us. When something happens, Ralph, did I have life insurance? Ralph, did I have X amount of things covered? How much life insurance did I have? And you get those calls. In fact, I'll tell you a story about one of my friends. When I first started the financial services industry, great guy, pretty cool guy. We did masters together in electrical engineering. And so I started first. I'm like, I got to reach out to my friends and show them the importance of insurance. We sat down together. I set this guy up with a very good insurance policy, had something that covered himself in case something should happen to him, he should pass away. His family's going to get a death benefit. He also had some cash value that he could take out of at some point. He also had critical illness protection within the policy, right? And so this guy gives me a call after like a year or so having the policy. He's like, hey, Ralph, what's going on? I'm like, hey, I'm good, my boy, what's happening? He's like, it's fine. He's like, someone is talking to him about Bitcoin. And this was 2021. Remember when Bitcoin was out there? Everyone's like, Bitcoin, SRP, all of these things. And so someone talking to him about Bitcoin, that he wants to cancel his policy and put the money towards buying Bitcoin. I'm like, what are you talking about? He said he wants to cancel the policy and put the money towards buying Bitcoin. He has a wife and he has a son. I'm like, wait a minute. If something should happen to you, what's going to happen to your wife and your son? He's like, don't worry. This guy Bitcoin is going to go there. This is going to go there. I want to just start buying more. And reluctantly, I was like, well, I'm going to send you this form. You're going to sign it that you are conscious, you're aware that you canceled it, right? A letter of direction. And so he signed it that, yes, I'm responsible for this if something should happen to me. And so I sent it into the company and that got canceled. His policy got canceled. So he stopped messaging me. We stopped talking. In fact, I was very upset. Why? Because he's my friend and I know the importance of having that insurance coverage.
Yeah.
6 months later, I see my phone ring because I was at the gym. You know, when you're doing a bench press and you see your phone ringing, you're not in the mood to pick up that call, right? So I'm doing my bench press and my phone is ringing. First time it rings, I'm like, oh God, who's this guy? Slide my phone to the side. Second time, third time, fourth time, fifth missed call. And I'm like, okay, I'm going to call him when I'm done with this rep, right? And then I finished working out that day. I didn't call him. I go back home. Now getting ready for the office and I saw my phone. I'm like, oh, this guy was calling me. Let me call him back. And I called him. I'm like, hey, bro, what's going on? I missed your call. This was how he sounded on the phone. He's like, hey, Ralph, how you doing? I'm like, I'm good. What's going on? What's happening? It's like, is there a way that I can just pay back all the premiums that I missed? I'm like, what do you mean pay back all the premium that you missed? I got diagnosed with cancer.
Oh my goodness.
I'm like, right there, I just felt cold, like real cold just went through my whole body. What did you just say? I've been diagnosed with cancer, bro, prostate cancer that he doesn't even know what to do right now. Can you imagine how I felt, right? Now, I can't imagine how his wife felt, how his son felt. Now, at that point in time, I felt so bad. Like, why didn't I force this guy to keep the policy? What could I have done at that time to make him keep this policy? Well, eventually I said, bro, it's over. It's been a while now. Your policy has been canceled. Now you have cancer. There's no way this insurance company are going to reinstate your policy because you already have cancer right now. 2-3 months later, I found out that this guy had relocated back to Nigeria, and then they started using traditional medication and all that to help him with his cancer.
Wow.
Eventually, he passed away,
Very
leaving
sad.
behind his wife and his kid.
Very, very sad.
I mean, I'm not saying that the insurance could have cured the cancer. However,
The family would have been in a better position.
financial position.
Yes, absolutely.
And
that's what insurance is for.
Exactly.
And guess what? This same guy, I believe he had a car that he used to drive.
He had a car, he had a mortgage.
And all of those have insurance. The car he drove had insurance. The house he lived in had insurance. See, these are all just material things. If you can insure material things, why can't you insure yourself? It is through you those material things became.
Mm-hmm.
Then the source, which they came into being, is not even insured. That's what we call financial planning. And a lot of people truly need to be educated about financial planning. There are some people with millions of dollars in their account still. They are not left out. They may be thinking, oh, yes, I'm well loaded. I have a lot of money. Even if I die today, nothing's going to happen to my family and all of kind of stuff. But there are better ways you can actually make use of that money. There is a way you can make use of your money twice, 3 times. Same money.
Let me add a little comment to that what you just said. You know, when you ask people a question, what do you want? I want to create a legacy. I'm like, that is a very big dream to have. What exactly do you mean by a legacy? I want to create generational wealth. I'm like, now you're talking. Now we're breaking it down to bits. I said, do you know that when it comes to making money like creating wealth, generational wealth, first of all, we earn money. Next thing we do, we have to learn how to grow money, protect your money, preserve your money, and transfer that money to your family tax-free. Those are the 5 steps when it comes to creating generational wealth. A lot of people get stuck in number 1 and 2. They know how to earn money. They know how to grow money. Some do. Many don't know how to protect, how to preserve, and how to transfer that money tax-free. And that is where a lot of financial education is needed. That is why people who have a lot of money just sitting down in the bank account or just sitting down in somewhere, they don't understand or they have not heard about the term called probate.
Mm-hmm.
And I think we're going to have that conversation at some point.
We definitely will get to that point.
They haven't understand what probate is.
Yes.
Especially in America today, they don't know what probate is. They don't know what what one health scare can do to all of that money they have sitting down inside of a bank account. Just one health scare. You know, someone said something. If you lose your money, you've lost nothing. If you lose your health, you've lost something. But if you lose time, you've lost is it time or you lose integrity or your character, you've lost everything.
Yeah.
Right? I just said that to talk about the second part. If you lose your health, our health is so important when it comes to creating what? When it comes to creating those big dreams that we have. I like to think about this when it comes to creating wealth. Like, you want to start from the beginning with the end in mind.
Yeah.
Starting from the beginning, this is exactly what I want. But then, what is the end going to look like? No one goes to build a mansion just like drawing and fixing blocks here and there, right? Or fixing things. You have to know what the design of this mansion is going to look like. Then when you have that design well set out, then you start building from the front till you get the design that you have.
That's what we call prototype.
Exactly.
So it's same thing here. Yeah. Probate. Let's talk about probate that you
Mhm.
just mentioned. A lot of people don't even know what this is. In America today, the first thing that happens to anybody that dies is their account is frozen.
Mhm.
Anyone that dies today in America, their account will be frozen. When you die in America, you pay taxes. A lot of people don't know
That's
this.
so true.
You pay taxes when you die in America today. That's what the American government does. Now, you have millions, even billions as assets, and you die, everything will be frozen. We've had such cases. Look at Bob Lee, one of the inventors or creators of Cash App. He was stabbed in California. And at that point, I think he was worth around $10 billion.
I think 10 million.
$10 million. Okay. What happened to him? His family had to create a GoFundMe to be able to bury him. That's a multi-millionaire. That's what happens because his account was frozen. Has to go through the probate court. That could have been averted if he had life insurance or he structured his financial life very well as expected. And that's the reason why we are bringing this to people today. So they know exactly that there's a need for financial planning. And one of the greatest tools one can use is life insurance. You talk about savings without having to pay taxes. You use life insurance. We've seen a lot of multi-billionaires today who have hid their money in life insurance and they pay small amount of money in taxes. And it's completely legal. The government is aware of this. There are tax codes that help take care of this. Something like tax code 7702, 162, and the likes help us to save in taxes. And you make use of a tool like life insurance to be able to achieve that. We have different types of life insurance, cash value life insurance, term life insurance, whole life, insurance, and so many other ones. So, can you tell us more about this? Tell us about those different types of life insurance and the one that you prefer that people really have in their portfolio.
Absolutely.
Yeah.
When it comes to life insurance, they're actually different. There are two major types. It's very simple terms. There's a permanent life insurance and there's a term life insurance, right? I like it. I say the reason they call it term is because it terminates over time. With time, you're not gonna have it. So you can have a term insurance for 10 years, 20 years, 30 years, right? Maybe 40 years. Some companies even offer longer term. I don't know that, or some company can offer longer. But with the term insurance, at some point, you no longer have it because it's going to terminate at some point, right? And when it terminates at that point in time, what's going to happen if you want it, you have to renew it. And what's going to happen to the cost of insurance is it's going to almost triple or double at that point in time because it's going to be way more expensive.
Yeah.
Why? Because you're older. So that's the term insurance. You don't get anything back out of that. It is cheap, usually cheap. That's the part that a lot of people like. Some people use it because it's cheap. However, the long-term value when it comes to creating wealth, I typically would not use a term because I don't have any term insurance in my portfolio. All of my insurance I have, they're all permanent. And why? Because with permanent life insurance, like I said, my strategy when it comes to creating wealth is from the beginning, have the end in mind. What if I live beyond the term? I want my family to have that amount of money even when I pass away. So now I'm looking at permanent life insurance.
Right.
And now with permanent life insurance, they have something called a cash value life insurance, whereby you can actually accumulate cash within your insurance policy. And you can leverage the cash that you have inside of the insurance tax-free through loans. Why? Because loans are not taxable income. When you take out loans from your insurance policy, you can utilize that loans to create cash or create an asset somewhere else in a different bucket or a different vehicle. Let's assume into real estate, into something else, while you have your money within your policy still growing and compounding instead of a casual life insurance. So that in itself makes it unique and makes it such a great product or a great tool when it comes to wealth accumulation and wealth creation and transfer. But most people are they're not very understanding of what the structure is like. And so when people don't understand something, they shy away from it. So that's the problem. So now we need to educate people you can use the large sum of money you have somewhere sitting down as a wealthy person, you can utilize that into a life insurance policy and take it out tax free.
Wow, beautiful, beautiful. A lot of people don't know this. Truly, like you have mentioned, I love permanent life insurance. In my portfolio today, you see a lot of such policies that I have. I keep most of my money in insurance. I only keep just a few amount of money in the bank. Say, for example, I need this money tomorrow. Yeah, most of my savings are in insurance. I can take them out as loan and they will still be yielding interest.
Mhm.
I can make use of that money that I've taken out as loan to do other businesses that will also generate me more income, profit.
Essentially using your money
I'm
in
using
two
one
places.
money in 2 or 3 places.
Yeah.
See? So, Raf, let's take it to a different level.
Mhm.
We talk about building wealth, right?
Right.
Let's talk about how money actually grows. I know we do have about 3 or more buckets of how money can grow.
Mhm.
We have the flats, we have the variable, we have the indexed,
Right.
right? Can you explain? Just give us a brief of each of these different buckets.
Absolutely. So in America, how money grows, money can grow in 3 different ways. The first one is a fixed bucket, basically your checkings account, your savings account. It's not growing anyway. We'll just say it's one of the ways money grow. It's fixed. So if you put $10,000 in your savings account and you're getting 0.5%, right? In the next 10 years, how much are you going to have in that account?
Minimum money.
Almost nothing, right?
Yes.
In fact, you might even lose money. Why? Because the
You have to
value of the
pay.
money,
Yeah.
the value of the money
Drop
you
in
had,
inflation.
exactly, inflation would have eroded the purchasing power of that money. So that's the fixed way. Checking maybe savings, right? And then the second part would be a variable account. A good example would be like the 401ks, the Roth IRAs, the 403bs. Why? Because
The
you're
stocks.
the stocks, exactly, bitcoins and the rest. Why?
Yes.
Because you're invested in the market, so your money can go up, down. That undulating movement of your money can be up today, can be down tomorrow, up today, down tomorrow. So there's no certainty of what your money is going to be like, right? So that's the second way, and that's where a lot of people actually use like the 401ks, because that's to the degree of their knowledge.
Yeah.
I can't do beyond what I know. So what people know, that's their limitation. They're confined within the boundaries of their knowledge, right? But now, the third part is an index bucket. An index bucket would now talk about fixed index annuities, talking about life insurance, a cash value life insurance. A good one would be an index universal life. So you are not actually invested in the market. You're only credited the performance of the market based on certain cap and floor rates that you might have with insurance companies. So your cash value is actually you have some guarantees, I'd like to say. So those are the 3 different ways you can use. Either you can use the fix, which a lot of people do because they are not very informed.
Yeah.
The index, the variable that goes up and down, that has it is good, but also it has its flaws, right? The flaws being that you never can predict what the market is going to do, right? And you might be surprised that just when it's time for your retirement, your 401k that was sitting at $500,000, the market, the S&P, let's say the Nasdaq does minus 25 that year or minus 30. What's going to happen? Your money is just going to go down and you're like left with that.
Right.
Now, it might take your money some time for it to come back up, right? Why? That's how money grows. But now with an index way, what's going to happen is that your money has some level of protection from the market volatility,
Right.
from the downside of the market. So
You never lose your capital.
exactly, something
So
that
as the chart is, it goes this way. It grows, it stops.
Mhm.
It stops where the market becomes turbulent,
Mhm.
and then when the market becomes okay again, it grows again. And when the market becomes turbulent, it remains there. It never goes down. It only goes up.
right.
Yeah. I watched a reel on Instagram a few days ago, which I also sent to you, of a man that lost $17.5 million. He used to invest in stocks, and then the market was good, and he was trying to cash out. And then during the time, frame, he had to wait for the cash out to happen. The market flopped, and he lost
Some money.
everything, basically. And of course, he said some of them went through divorce fees and all of that. But that's what happens when you are playing in the variable market. it fluctuates, it goes up and comes down. And that's why I'm an advocate of having more in the indexed. So I have portfolios in the variable as well. I buy stocks, I buy crypto, I have those assets. But I can tell you that it's more guaranteed to play in the index. And that's why I really like the life insurance. I called my life insurance, policy producer. Hey, please, I need so and so amount of money as a loan. And I said, consider it done, sir. A few days later, I received my alert. The money was in my account.
Right.
You see? So that's the beautiful thing about index and life insurance. It is very, very important. And I encourage people, to look into this.
Because a lot of people don't know that you can actually take out money from insurance. To their knowledge is like until when I die. It's only when I die. And that is valid when it comes to term insurance. So the term insurance is only going to pay out when you pass away.
Yes.
If you are not there, there's no payout. And if you live beyond the term of your insurance, there's no payout at all, right? But with a permanent insurance, there's something called the cash value where you can take out from your policy, and people get surprised. I can do that, really?
Yes.
I can take out money from my insurance
while I'm still living?
While I'm still alive,
Yes.
And people now, let's not talk about chronic illness and critical illness.
Yes.
That some insurance companies actually give you a certain amount of money from your death benefit while you're alive in event that you get diagnosed with a critical illness or the chronic illness.
Exactly. That was what I was talking about earlier when I was talking about you being able to sustain your lifestyle. So my first policy, I have many policies, by the way. In one of those policies, I get $30,000 every month if anything should happen to me now. That is guaranteed protection for me. If anything should happen to my health today to the point where I'm unable to produce inflow of cash, my policy would pay me $30,000 every month. That's what we're talking about. That's the protection we're talking about, which a lot of people don't know. This is part of living benefits. Like you're saying, living benefit and death benefit. People only are aware of the death benefit, which is only associated with the term life. The permanent life has more than that. It gives you options to have living benefits and also death benefits. Why do I have to wait till I die before I enjoy my wealth? I should be able to enjoy my wealth while living.
Right.
And that is what a lot of people do not know. And that's the reason why we're having this conversation today, just to educate these viewers that you can actually have both death and life benefit or living benefits in a life insurance, account. Right. Yes. Now, Ralph, let's take it to the next level. I know we have spent a lot of time here. It's been so interesting so far, right? Let's talk about how even the wealthy, those who are already very okay today, how they can benefit more in life insurance. For example, let's talk about, executive, bonus, talk about key person insurance for business owners, right? So that they can actually reduce their taxes and earn more, because it is not just about making money. It's what can you keep? What can you retain from what you have earned or what you've made? And how can we make use of life insurance as a tool to achieve that?
Just like I said, like a disclaimer, we're not tax professionals. We don't do taxes for people, right? So information we're going to give is just basically our opinions and what we know and what we've read for ourselves, right? So you must speak to your tax professional to give you a better understanding of what you might hear from this podcast, right?
Absolutely.
Okay, cool. So now talking about key person insurance, it is something that is very, very important, especially let's assume you, Mr. Ennis, you have different businesses, right? You have so many businesses and you are a very important personality when it comes to your business. In fact, your business needs you. If something happens to you, your business no longer cease to exist, right? So you are a key person in your business, right? So your business can actually get a policy on you that if something should happen to Mr. Ernest or Dr. Ernest, what's going to happen is that we are going to get X amount of money as a death benefit or whatever it is that was set up, right? So you might, let's not put you on the side. Let's assume you have a staff, someone who's your key man in this business, or let's assume your business partner, right? And this guy, we need this person in this business. We need to ensure that this guy is protected. So key person insurance means that the company most likely buys a policy on that guy that in the event that something should happen to that person, now they can utilize the death benefit before maybe to train a new staff or to train someone new who can now take a role of that person that passed away,
Right.
right? So that's where key employee will come in. And now you said something about executive bonus and all that. That's basically where, as an executive of your company, a certain amount of your what's it called? A certain amount is given to you as bonus by the business, right? So the business gives you a certain amount as bonus, and that money that was paid to you as a bonus, becomes a tax deductible to the business.
Mm.
However, it could become a taxable income for you as a bonus. So, but there's something called a double bonus. So with a double bonus, the company now gives you money to pay that taxes on the bonuses that you earlier received. So that's where the executive bonus comes in. And a lot of wealthy people who I know, some of my clients, they actually utilize that strategy when it comes to creating wealth for themselves and also creating wealth, generational wealth for their family. Why? Because this is something I want people to understand, especially the wealthy people. Life insurance is essentially you buying your net worth while you're
I
still
like
alive.
that.
You're using a certain amount of money. This is how I view it. How I view life insurance is I am buying my net worth while I'm alive. Because whenever a person passes away, that's when they say, oh, he was worth X amount of money, right? This Mr. A passed away, he was worth X amount of money. Now talk about the money that was paid in death benefit. Now your family received this massive amount of money if you can qualify for it.
Right.
So I tell people, if you have the money, buy as much insurance that you think you can qualify and you can afford. Why? Because you're building or you're buying your net worth already.
Exactly.
And your family will thank you. In short, your kids and your children's children will thank you if you're able to combine that with a trust.
We'll come back to trust.
If you're able to combine that with a trust, you have created a magic. You created magic for your family.
You
And
know,
that's
your net worth is not the cash you have in your
from your
hand,
job or
or
something.
whatever.
No.
Your net worth is all your assets. And life insurance is considered a tier 1 asset, not just an asset, a tier 1 capital, tier 1 asset. If-
Let me talk. So I first keep my mind. I have this guy. This is one of my clients that
Yeah.
I talk to. He's a great guy, my very good friend, one of my big clients. And he's like, Bravo, give me some ideas. Give me some ideas. He has a lot of properties, right? So many real estate. Real estate is good. I love real estate, 100%. But again, with real estate, you have to deal with the renters. You have to deal with the property managers. You have to deal with so many of those things, and it could be daunting for sometimes. Some people don't have the mental strength to deal with all of those things, right? And he has a lot of real estate, and I said to him, "You have real estate? Do you have enough insurance?" He's like, "Man, I only have like $200,000. I'm like, "Bro, you need more than that." And so we get him a very good insurance policy. Now he is so happy for that. And why? Because with the death benefits,
Yeah.
your family gets cash, right?
Mhm.
But when you leave behind houses and properties for them, like people who are big in real estate, if you don't have a spouse that could roll to, what's going to happen is that your family now have to pay taxes on those houses that you left behind. for
Yes,
them.
of course.
And if there's no money to pay the taxes, what's going to happen? They start selling those houses one by one. And then you be like, all of what I was trying to build for these guys
Gone.
in your grave, you're like, they're gone, right?
Having a house is expensive.
It is, bro.
Having real estate is expensive.
It is expensive.
Yeah, you pay taxes on them. You see, that is what a lot of people are still really trying to come up to. They're really trying to come up to that level of knowledge to really understand this. See, okay, that is where even trust now comes into play.
Mhm.
Let's talk about trust as part of financial planning, method, right? Take a look at trust. And when I mean trust right now, I'm merely talking about the ILIT, irrevocable life insurance trust.
Right.
Because the best trust you can ever have is the one you have structured with a life insurance in it.
Mhm.
The life insurance now serving as the founder of that trust. That is what ILIT does. Yeah? You have all your properties, all your real estates, all of those things, your businesses and everything all structured, your bank account, all structured, even to read, and you know all your beneficiaries to do all of those things. And then you have a life insurance that you will make the primary beneficiary of the trust.
Mm-hmm.
So whatever happens goes back to the life insurance, and the life insurance actually funds the trust. You don't have to be worried about how those taxes on those estates will be taken care of, because everything will be taken care of now by the life insurance.
Yeah.
It lives, it doesn't die.
You
It's
know,
a living entity.
I think that's I think the Rockefeller waterfall method. That's what you're
Yeah,
trying to describe to
exactly.
me. The waterfall method, whereby they buy life insurance, right? And with the life insurance, what's going to happen is that the life insurance death benefit now pays for life insurance for other people,
Yes.
like for the kids, for the grandkids, right? And now the grandkids get life insurance. The trust own life insurance on these people, and now that money, all the death benefit, all falls backward into the trust.
Exactly. Exactly.
It's incredible.
It's incredible. You can imagine your whole household, you have 2 kids, a wife, whatever, and all of them have policies. And all of those policies are reporting to that trust. It keeps running over. Whatever happens, it comes back to the trust. Everything is in the family. It comes back to the family. And the beautiful thing about that is you can give an instruction on how it should be executed.
Absolutely.
So when you are no more, nobody can do and undo. Whatever instruction you have given is what the grantor and all of those will have to abide by. You don't lose nothing, because you may have wayward kids who could run down your empire that you struggle to build for decades down overnight. But because you have already given an instruction, the way the trust should run, none of them is able to do their own will. Everything goes back to your will.
Basically, with the trust, the trust is in your absence, you are still in control.
Yes, exactly.
Because though you're not there, with the set up rules that you've set in place, that is exactly what's gonna they have to follow the rules of the trust, right? I was actually cracking some jokes with some of my friends. I'm like, you know what? When my great grandkids, when my beneficiary of my trust want to start taking from it, like one of the rules I'm going to include to it at some point will be everyone needs to have a picture of me on their wall in their house before you become a beneficiary of my trust. Why? So you remember the person who created
this wealth.
Said there's this very popular African old adage that a wise man plants a tree in whose shade he may not sit under.
Wow.
Like a wise man plants a tree in whose shade he may not sit under. But one day someone goes and sits under the tree, and what he says is like, wow, God bless this person that planted this tree one day. God bless this man, otherwise his son would have burnt my head to God knows what, to ashes. Exactly. But God bless the person who put this tree here, that I can sit down here and use this tree as a shade, or as a shade rather. Right? It's the same thing that I think about when I'm talking about estate planning, creating generational wealth. It's how I'm going to set this thing up for my grandkids, that one day they'll be like, God bless our grandfather. Because it only takes one person in the family to make that decision that I want to create generational wealth. Beautiful. Are you willing to become that person for your family?
Beautiful.
That's a very important question that we all have to ask ourselves. Do I want to be the person? Because people say you can create wealth. You can create wealth for your family, but you have to decide that I am going to do what it takes. I am willing to be a little bit frugal now so that I can transform the name of my family, the name of my kids, for generations to come. But how many people are willing to do that? Rather, people are only ready to spend everything they earn today. Why? Because they really don't care about what the future will be tomorrow for their family.
Wow. I like that perspective. We have said a lot today. We have really said a lot. I hope you have been able to receive one or two nuggets that has been able to change your life, or that will change your life forever. So in rounding up, right, I just want us to understand this. One thing that is certain, that is inevitable, is death. Everybody's going to die one day. We only pray to God to preserve our lives and extend our lives, right? But one day, everyone is going to die. Now, if we are aware that this is inevitable, Why can't we make use of it, judiciously? When you know one day you're going to die, why can't you make use of that death, to benefit your family? That is the essence of life insurance. See it as a sacrifice. And if anything should happen to me today, let it be that my death has brought wealth to my family. Have you even thought about that? You see, death is inevitable. Don't just die and put the people that you love in pains. Let it be that the money that they're going to get from your life policy brings smile to them, and they are not going to be scared of how the next decade will be for them. In rounding up, Ralph, what do you have to tell the people?
I mean, you have said it all. Like you said, like the certainty of death, taxes and debt are two certainties we'll always have. We only have to deal with. Why don't you use the certainty of death to create wealth? And also remember that you can strategize your wealth to the point that your kids, your great grandkids, will one day smile to the heavens and be grateful for you because you were knowledgeable enough, and not just knowledgeable, you took action steps to creating generational wealth for your family. I'll say thank you so much, guys, and thank you, Dr. Ernie, for having me
Thank
on
you
the
so
podcast.
much for coming again to the
Absolutely.
pod.
Thank you so
It
much.
was nice having you again.
Likewise, I appreciate that. Thank you.
Absolutely. Until we come your way again, remain steadfast and be wise. Bye for now.